My name is Paige Ollice, and in the next 365 days, I'm going to become a millionaire. Good morning. I apologize in advance. I'm a little under the weather the last couple of days. The biggest question that I keep getting from people, where do I get the money to start out a project like this? How am I going to make $1 million in a year with no money? That's actually one of the easier things. I have a background in real estate investing, so I understand how to use other people's money. What I want to talk about today is how you're going to go about getting some funding. So first is hard money. If you take a loan from a company who generally does riskier stuff like lend to businesses or they'll lend for real estate, anything that a traditional bank isn't going to lend for, you can get hard money lenders. It's generally a higher interest rate. You're looking at 10 to 14%, and then you also have what's called point. Whatever your total amount that you're borrowing the very first day, we'll say you borrow $10,000 and it's 2 points, then you also have to pay 2% of that as a fee. So you'd pay $200 just for borrowing that money. That's on top of the 10 to 15% interest depending on your credit score. If you have a lot of equity in a project that you want to work on or you really believe in it, you can do hard money. It's expensive, but once you've worked with the company a couple times, they're generally not bad about working with you and being a little more flexible. And then you also have brokers who will refer you to different hard money lenders because some hard money lenders do different projects than others. You also have to pay the broker's fee, which is generally 1 to 3 points, maybe 4 points as well. So you'd pay the broker his 4 points, you'd pay the lending company their 2 points, you'd have to pay the interest on the money that you borrow as well. There's a lot of scammers out there who will advertise these stupid low interest rates or no points or no credit check and all these other stuff. Those are all scammers, and what they're doing is they're going to charge you an upfront fee. Usually it's an application fee or something along those lines. They want money up front. They say that they're going to look over your portfolio to see if they're going to approve you or not, and then they can either decline you or just disappear, depending on how well of a process they have set up. If it's too good to be true, if it's lower than maybe 8%, 9%, you should start thinking carefully about it. And if they're charging any kind of upfront fee, be very careful about it. So some things you want to look for is, are they charging a fee? What's their interest rate? What's their email address? Because a lot of them have Gmail email accounts. That's not professional. Even my account is Paige Ollice at olliceinvestments.com. So it's not hard to make a business account. So if they have a Yahoo or a Gmail or a Hotmail, you need to be concerned. And then on top of that, check out their website. If you look at their website and it looks legit, chances are they put some money into it, they put some time into it, and it's a more legitimate company. Still not going to promise that it is, but definitely you're going to want to do your homework before you use hard money, but it is available to you. And I've worked with hard money. I've done some good deals with some great brokers, some great hard money lenders. So it is definitely a possibility. It's out there. It's just expensive. So number 2 is personal lines of credit. So a bank loan is a one-time use. They give you a set amount of money for a set amount of time and with a set interest rate, which may or may not change depending on your terms. But you then pay it back. It's a linear process. They give you the money, you pay it back incrementally till it's all paid back, and then you're done. You never see that loan again. So a line of credit is like a bank account filled with money. It's also called a PLOC. And as long as you don't touch the money, you don't pay anything for having it. You might have an annual fee, but usually those are low. But most of the ones that I use don't even have an annual fee. The difference is you can take that money out. So you can withdraw it just like cash because it's just an account filled with money. So you withdraw some of that cash to use for whatever project you have, a Craigslist, Fiverr, credit card, whatever. You can use it for real estate down payments, repairs, whatever you need it for. So you withdraw some of that cash. And now you have to pay interest on what's missing for as long as it's missing, just like a credit card. You pay it back over time. You have a minimum payment every single month. Usually it's 2% of the total balance plus the interest that's been accrued that period. And you have that money. It's available to you. As you pay it back, you then can withdraw it again because it's back in the account. So it counts as your payment for the month, and you could deposit $100, withdraw $100, deposit $100, and it counts as you paid $200 that month. That said, I don't recommend doing that long term. You're going to end up accruing a lot of interest and hurting yourself financially in the long run. But a line of credit is absolutely great. It's called revolving. You don't have to reapply every time. So if you need it for a project right now, you apply for it, you use it, you pay it back, and then, a year from now, you don't have to apply for another loan. You still have that account filled with money. So definitely personal lines of credit are the way to go. I have some that are as low as 6% with small local banks here in Hawaii, and then there's also some that are a little higher, like 14, 15%. But personal lines of credit are absolutely a huge help, and something that I'm going to be using a lot during this process. So traditional loan, you go to a bank and you say, hey, I'd like to borrow money. They check your credit score, and then they will decide if and how much to give you. So again, they're linear. You get the loan and then you pay them back, and then that's it. And then you have to apply for another one if you want another one. Maybe your bank doesn't offer personal lines of credit, then yeah, you just get a personal loan or a business loan, and that's for one-time projects. You have house loans, which are mortgages. You have building loans. You have bridge loans, a temporary, like 2 to 6 month loan, maybe a year. Generally high interest rate, but it's interest only for that period, and then you're going to refinance it into another loan. It's something everyone knows, everyone understands, but it is out there. Next is seed capital. So this is a very, very unique thing. If you have a great credit score, or a very good credit score at least, what you do is you apply for seed capital, and that's a bunch of 0% APR credit cards. Usually that's a temporary 0% APR, and then it's going to skyrocket later. So when that credit card shows up on your doorstep, it comes with an envelope filled with checks, and that's for transferring from old credit cards to your new credit card any balance that you have. So if you had a credit card that was at 25% APR and you wanted to pay it off faster, you'd apply for a 0% APR credit card. It shows up, you use that check to pay off the previous credit card, so that now what you did was you moved that debt from the 20% or 24% APR card onto the 0% APR card with a 1-year 0% APR agreement. So then as you make your same payments, you're paying it off faster than you would have before because you don't have the interest to worry about. That's how it's designed. What you can do with seed capital is you apply for multiple of these 0% APR credit cards. You use that check to deposit for cash, and you're cashing out these credit cards. Now, you're going to take a hit on your credit score, usually for the first 6 months to a year, depending on what you do with it and how fast you pay it off. You can get a lot of money up front off of a project like this. You need to look for 0% APR credit cards that have balance transfers with 0%. You want at least 6 months, but generally you want 12 months on all of those credit cards just to give you extra time to pay those off. And you want to pay them off as quickly as possible, because after that introductory promotional APR, it's going to skyrocket, usually to 16 to 25%, sometimes more. That's a high risk option, but it's not a bad option for fix and flip in real estate, starting their own business that they know they're going to make cash back. Please do not invest that in Bitcoin. I've had clients who've talked to me about Bitcoin and taking out loans to pay for Bitcoin because they knew it was going to go up. Please don't do that. That's how the 2008 housing market happened, was people taking out loans they couldn't afford on houses because they thought the house would just go up and up and up, and then look what happened. So seed capital is also an option. All that is a bunch of credit cards that you're cashing out temporarily to use for cash. The last one I'm going to cover is private money. This is absolutely the easiest and preferred way. This is when you find either friends or family members who have money who lend it to you and you promise to pay them back plus interest, just like a normal loan. Private money is way easier than the banks because generally you can talk to your friends and family about the terms. You're happy to pay your friends and family the interest because they're making money, not the big bank. Also, if you need to extend it or you have some issues or whatever, you can work that out with them. And they don't do credit checks. They don't do full appraisals of your real estate. They don't do all the same things that hard money lenders or traditional lenders would do. So private money is absolutely the best way to go. Again, I have an investment company, so it's cheating to use any of my investment company. So I'm trying to find new private money starting now that I'm going to keep you updated on. It's important to note that all of these things are just loans. So this does not count towards my $1 million because it's not profit, it's not equity, it's not mine. I have to pay it all back. But say I get $100,000 from this, you can invest $100,000 on a real estate deal as a down payment, which means I could probably get up to $1 million in actual property. I buy it for $1 million, I put $100,000 down payment, and I get a loan for the other $90,000, which is like 1.2 in actual value. So what that did was that just got me $200,000 worth of equity right up front. Now, that's an example, but that's something that you could do. If you get the capital up front, you can do a lot more with it. So how I'm going to use capital like this and strategies like that in order to make that $1,000,000 over the next year. Hopefully you learned something about capital from this one. Please stay tuned, and thanks a lot. For 2018, I wanted to make a New Year's resolution that people could relate to. Everybody wants more money, so I'm going to show you guys how it's done.